Friday, 21st of October, just looking across the markets now. I'll obviously review the main event yesterday for Draghi and that break in the euro. I was talking about that in yesterday's briefing. If you go back to yesterday's briefing, obviously we were looking at that support level in the euro and talking about its significance in terms of it being a multi-day low, a multi-week low. It was about going back to June, wasn't it? And yesterday we did break through it, but it wasn't a clean trade. Obviously nothing in life is easy. I think all traders recognize that. The sooner you recognize that, the better. When Draghi started speaking, there was a slight hawkishness in terms of no further action, but he absolutely then came out with the statement that December was going to be a live meeting. And it's very likely now that you will get an extension of the QE program in December. And it was that comment that helps us break through that support level we were talking about throughout yesterday's morning briefing. So here it was. When we were giving the briefing yesterday, it was about 8 o'clock and I was highlighting 1.097, looking for the break. We did break through it. And for those of you guys that were trading this event, we had 1 and 2 classic opportunities to get back onto that short euro. This would have been fundamentally a very good trade. Obviously you had the technical level. If I go back onto a daily chart, you can see just how important that technical level is. All the way back to June, July and August. Euro breaking to new lows now again. So the euro, you can see it on my ladder here, just breaking through the new lows. What we have here, well, I mean, if you look at things like the yen, however, if you look at what's going on in the yen's bid at the moment. The yen's holding on to its pivot level. Cable, not too much action going on there. Other currencies, Aussie dollar bid. This isn't necessarily a dollar story. It has been a dollar story, what's happened to the euro in recent past, but this is a euro story now, guys. This is expectations of, well, Draghi's recent hawkish tone that he's been delivering throughout the month of September. That's what's now getting taken away. Okay, so that hawkish tone from the ECB is now getting stripped out of the market, and you're finding the euro being the main loser of that occasion. Here you can see July, August support in the euro versus the USD, despite really quite aggressive dollar strength. But now look at the importance of this level in the euro. So all eyes on the euro, please. I think if it does continue, obviously it's the largest currency traded against the US dollar. If it does continue, you will find other currency pairs begin to follow suit or have some kind of sympathy with this move. I traded off that on gold this morning, just looking for a break of S1. It didn't happen actually, and I managed that trade badly. You know how I am always of the ilk of, guys, if you're trading a breakout, don't give it any room. If it doesn't break, get out. Well, I was perhaps a little bit lazy on that, didn't do it, and ended up taking a bit of a loss on that move. Let's see if we come back down to S1, however. In other markets, an interesting one to look out for then is the DAX. So you guys all know what's going on here on this monetary policy move. Euro's moving lower, European equities are moving higher. Doesn't this make absolute sense? It makes absolute sense if the Central Bank of Europe are going to be there to continue to support risk assets, and the DAX is benefiting from this. However, the correlation is not as clean as you would have hoped, because whilst of course looser monetary policy, the weaker euro will support European equities and did support the DAX yesterday, pushing us to these summer levels. Everything's on key levels at the moment. So the euro breaking through its summer low and the DAX now just approaching its summer high. Can you see that there? 1074, 1074.9, 1075. Just this once, twice, 3, 4, 5 times throughout August, September. We're now approaching this DAX level again. If we do break through it, I'd look at 11,000 as the next target if we break through it with momentum. I don't know. I'm not feeling overly confident about a break higher at the moment. I'm believing that there'll be more of a resistance at this level, but if it does break, then obviously you have to trade it accordingly. So we had Draghi yesterday come back and reassure the markets that his new his new hawkish tone was just a fad. He's back to the good old Draghi that we know and love. Euro lower, European equities higher. Thank you very much, Mario. Also yesterday, you had Theresa May take the first step into the European Parliament. Two things were evident. Obviously, her stance that Brexit means Brexit, whatever that means. Her stance to the Europeans that we will be leaving the Eurozone, but the UK does want to be still a partner that contributes to the bloc as a whole. It doesn't mean we're going to unhook the United Kingdom and take it to the other side of the globe. That's what she was trying to say. What was very clearly coming from the Europeans was very much, well, whatever. We're going to let you talk about that at 1 in the morning. They didn't get to talk about Brexit until 1 in the morning. More pressing was the failed Canadian trade deal that they had to talk about. So anyway, but at 1 in the morning, and after that, the message from the Europeans was, we don't really care, but we're not going to talk about it until you sign Article 50. So, from the pound's point of view, why is this bipartisan approach happening between the need for us to talk about the details and the lack of want from the Europeans to talk about the details? Well, it's because as soon as Article 50 is signed, Britain loses all of its bargaining power. Before Article 50 is signed, we have bargaining power. We have the control over when we leave or when we don't. But after Article 50 is signed, all the bargaining power moves to Europe. So it's understandable the Europeans are saying we will have zero discussions before you sign Article 50, because we don't want to have a negotiation whilst you've got the cards in your hand. We will only have a negotiation once the UK has given up all of its negotiating power. And then you'll see what type of deal the UK will get. And it doesn't have to be a rocket scientist to learn it will be a bad one, of course. Hollande saying if the UK wants a hard Brexit, it will get a hard Brexit, but otherwise it was relatively mild and relatively muted. No action in the pound overnight. As you can see, we're still hovering around the pivot level. Today is relatively quiet, I'm afraid. Well, it's not relatively quiet. Today is quiet on the data front, I'm afraid. Let me just bring up that figure sheet. So we've got UK public sector cash requirements, 930, nothing too hot on that. And then really, that's it. No major news out. We do have Feds Williams speaking as San Francisco a bit later. He is a non-voter, however. Just having a quick look at oil. We've got no oil data today. Obviously, Wednesday's figure was the main event. But for you guys that don't mind trading a range, it does seem to be caught there, doesn't it? Between 50, the August high, 50 and 52. And we've been here now since the beginning of the month. So just keep your eyes as we get back close to 50. In the absence of any other news for you oil traders, that might be a worthwhile opportunity there. But two key potential movers now. Euro moving back down to the lows. So Euro having, just as I've been speaking, we've taken another 20 pip move lower after we broke through the morning's lows. That dollar strength, if it continues, of course, it's not necessarily dollar strength, but if you're selling euros and buying dollars, that does lead on to general dollar strength. Keep an eye on the pound as an opportunity on those triple lows as well, 122.41. And commodities might also come under pressure should this continue. And that was the move yesterday, actually, in oil. I had a decent day yesterday trading equities, and equities took their move lower, because look at this move in oil yesterday.
So just in terms of the latest.
And this move in oil yesterday, due to the move in the euro strengthening the dollar. So keep an eye on commodities as a correlated trade off those currency pairs. Okay, guys, that's it from me this morning. Very brief briefing, but not a huge amount to talk about for the day going ahead. It's likely to be quiet. I know month one, you've had your trading competition. Month two, well done for those of you that did well in that yesterday. For everybody else, if you've had a good week, just try not to hand it back today. If nothing's happening, nothing's happening. Just trade when you see an opportunity. That break in the euro was something decent. A potential push higher in the DAX, but at the moment, nothing else too much on. So patience, please. That's it from me. Have a good session. I'll see you in the room.